Okay, good morning everybody. We're working our way towards the end of the weekend here. It's Thursday, June 28th. The overnight trade, a smidgen higher, smidgen lower. Corn, soybeans complex still kind of containing itself from last week's sharp breakdown in prices. We kind of know where our lows and or risk reward is if you want to be a bull, roughly at around 360 in the December corn and 865 in the November beans. And we're trying to rebound ourselves off of the lows of the move and or contract lows in the wheat markets. We're going to have weekly sales coming out later on here this morning in a few minutes. We know that we haven't really been doing anything too spectacular, but maybe they're proving a little bit, particularly as far as we're competitive in the corn market, and perhaps that the Argentinian and the Brazilian cash markets have been improving, making ourselves a little bit more competitive going forward. But that's not the focus right now. We're going to get a hogs and pigs report coming out after the close. But the big kahuna's tomorrow, first notice day for the July futures. They're looking for basically no wheat and meal, maybe in the neighborhood of around 2,000 soybean oil, maybe 500 beans, and maybe in the neighborhood of around 600 corn. So once again, that's going to be number one. Then we have a Canadian acreage report coming on out. Then we get into the 11 o'clock time period when we're going to have our planted acreage, and then we're going to have our quarterly stocks report come on out. Then we're going to go into the end of the month, end of the week, end of the quarter at 1:15. Then we're going to go and have our commitment traders report coming on out. So how's that all going to tie into our prices as far as where we know where our risk reward is as far as the spike down that we had last week? Then we're going to turn the calendar over and looking at the commitment traders report and the reports that we get yesterday, or tomorrow, excuse me, and then we're going to go and look at what's going with the weather going forward in July. If you look at the NOAA maps, 6 to 10 day, 8 to 14 day, they're pretty much warm and dry. So if that pattern starts to take shape and stays that way through the whole month of July going into August, that'll be a big variable over these most spike down lows that we've seen. Particularly after we look at the commitment trades report, we're assuming that the trade is still somewhat of a small net short position in the soft red winter wheat, corn, and beans, but they still maintain this sizable net long position in meal versus the soybean oil. So let's just say take meal and oil away. We're just going to say that the trade's pretty much net flat going into this end of the month, quarter, and week. And then looking at the reports going forward in here. Once again, July weather will take out the lows that we've seen in the spike down, I would believe, with the trade starting to get short and or vice versa. And once again, I didn't even talk about the politics. Once again, this is my opinion, not that of ADM or ADMIS. Thank you.